Good morning. Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Friday, January 14th, 2010. It's 11:30 a.m. in the U.S., 4:30 in London, 12:30 p.m. in Hamilton, Bermuda, and 10:30 a.m. in Mexico City. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. A programming note, next Thursday, late Thursday, we will be interviewing Tom Bolt, the franchise director at Lloyd's in London. The interview with Mr. Bolt will be run on 2 days, on Monday and Tuesday, January 24th and 25th, and then will be posted in its entirety on our website for viewing. We'll go to our main news today. Well, the main news again centers on the flooding in Australia. This time Applied Insurance Research up in Massachusetts has weighed in, saying that the total cost to the global insurance industry could be as much as $6 billion. In an interview with Bloomberg News, Milan Simic, managing director of the company, said that the floods in the region of Rockhampton and the other parts of Queensland could have caused insured losses of some $2 billion, while the events in Brisbane, the 2 million population city and its environs, would cost $4 billion. With Suncor and IAG, the main insurers in the state, protected against such loss events by reinsurance, Mr. Simic said that most of the liability would probably find its way through to the reinsurance market. Today, the flood waters were finally beginning to recede in Brisbane, leaving a residue of mud throughout the whole city, although many affected areas are expected to remain underwater until the weekend. Queensland's coal mines, responsible for a significant proportion of the state's economic activity, could take another 6 months to be brought back up to activity. In Germany, we ran this story last week. There was a dioxin problem with poultry and with pigs, swine. Insurers are now expected to foot the bill for most of this. This is coming from an article by Friedrich Krieger in Insurance Day today. The animal feed manufacturers will pay the claims initially, but presumably then would go to their insurers. A spokesman for the German Association of Animal Feed told Insurance Day, if companies have delivered dioxin-contaminated fodder, they will have to pay the claims. The scandal has caused a lot of anger in Germany. It's caused a tremendous amount of agricultural disruption. Eggs and poultry, as well as pork, were contaminated. Thousands of farms had to be closed, and farmers had to destroy eggs and were unable to sell animals for slaughter, leading to enormous losses. All 25 of the affected fodder producers had suitable product liability insurance. Now, that risk was placed with, quote, a worldwide active industrial insurer. The name's not been given out yet, but the Association of Animal Feed Producers is working on the assumption that there'll be no gap in the cover. The insurers are already saying, well, there may have been some negligence on the part of the feed manufacturer. If the companies that are still producing the feed had tested their products regularly according to regulations, then those companies could not be blamed. In that case, the insurers would have to pay. However, obviously, this is something that's going to be checked very carefully because the cost could be relatively large. The starting point for the dioxin contamination is the fat producer, Harls and Jensch in Schleswig-Holstein. The company has, in the meantime, it's filed for insolvency. They've begun to receive a number of claims from producers of animal fodder. According to the insurer Provincial Nordwest, the company holds a liability policy that's carried by a consortium of several insurers. It's unclear whether the companies will be asked to pay. I'm sure they're going to be asked to pay, but whether or not they're going to have to is another story. In Brazil, the toll keeps getting worse. 537 people now at least have been killed, and many more are feared dead after mudslides have devastated towns about 40 miles north of Rio de Janeiro. More rain today complicates rescue efforts. Rivers of mud tore through towns in the mountainous Serrana region, leveling homes, throwing cars atop buildings, and leaving at least 15,000 people homeless. Toby Esser has struck again. The very active CEO of Cooper Gay Sweat & Crawford has agreed to move to a 100% shareholding in its Mexican reinsurance broker, Cooper Gay Martinez del Rio. It's acquiring shares held by local senior executives. The company was established in 1996 in Mexico City, and it is a reinsurance brokerage. It specializes in Latin American facultative and treaty reinsurance solutions to clients primarily in Mexico, Central America, Panama, and the Dominican Republic. Argo International has made some news. Julian Enoisi has resigned as chief executive of Argo's London business. Enoisi will officially step down from the post on March 4th to pursue other business interests. He had resigned as CEO of CNA Europe in 2009 to become boss of Heritage, which was acquired by Argo. Jeffrey Radke has been appointed managing director of Argo International pending FSA approval. He's going to take over Enoisi's responsibility for overseeing Argo's syndicate at Lloyd's. Meanwhile, the U.S.-based Argo Group has appointed Andrew Carrier as Group Chief Underwriting Officer. In the UK, a relatively virulent strain of flu now has caused 112 deaths in the country since September. This is confirmed by the government. The figure is up on the 50 cases reported last week and includes 6 children, all under the age of 15. The number of people in critical care in England, however, has dropped from 783 to 661. The government said flu is circulating in the community, and the message remains that those people in an at-risk group should have their vaccine as soon as possible. The pharmacy giant Boots has also revealed that its stores have, quote, very limited stocks of the vaccine, and there was currently no hope of replenishing its supplies. Flu vaccines are made by GlaxoSmithKline, Novartis, Sanofi Aventis, all of which stocked up big on H1N1 shots last season to deal with the pandemic that proved less severe than expected, and as a result, substantial stockpiles of that vaccine went unused. In Tunisia, the situation becomes more precarious. Tunisian medical officials are saying now that 13 people have died in new violence in the North African country. The deaths came late Thursday, when the president, Zine Ben Ali, went on TV to announce concessions supposedly designed to ease weeks of protest. The government has not raised the official death toll of 23 for several days. Surgeons at Tunis's Charles Nicolle Hospital are saying that at least 10 people are dead there. Employees are saying that 3 more people, in addition to the 10, have been shot to death. Today, thousands of angry demonstrators marched through the capital of Tunis to demand the resignation of the country's president. Hundreds of foreign tourists have been evacuated amidst fears of more unrest. That's a potentially very, very explosive situation. Well, in all of the world's capitals, there are usually lobbyists. This is an unusual situation. As many people are aware, the Russian-based or the Russian-backed hedge fund or capital fund Pamplona has for a long time been trying to increase its stake in the Lloyd's insurer Chaucer. Pamplona is trying to increase its current 9.99% stake in Chaucer. Once it goes above 10%, the Financial Services Authority has to approve it. Well, it seems as if Pamplona has a little bit of a heavyweight lobbyist. Here he is, the Russian Prime Minister Vladimir Putin. Putin is believed to be concerned about Pamplona's bid to increase its stake being stalled. Russian officials aim to hold talks with British authorities to establish rules that apply to our financial institutions in the UK so that they would be no worse off than those which apply to British companies in Russia. Russian officials have complained to the FSA that the regulator had restricted Pamplona's activities. Pamplona manages a whole variety of instruments. They announced last May that they want to acquire 29.9% of Chaucer. The FSA stepped in to block it. They've kept them at the 9.99%, and they have yet to render a verdict. The FSA declined to comment on the rumors that, in fact, Russian Prime Minister Vladimir Putin himself may have entered this ring. I will be in Bermuda on Monday, Tom Bailey will be doing this news from London. I will see you on Tuesday. If we have any breaking news, I will come back and tell you. Thank you for watching and have a good weekend.